All right, the numbers are in. Citigroup just dropped their full year 2025 earnings, and we've been digging through it all. So we're going to break down exactly what you need to know. Let's dive right in. So, when you boil it all down, there's really just one big question on everyone's mind. Was 2025 actually a good year for Citi? Well, let's find out. Okay, let's start with the big, flashy number everyone looks at first: revenue. And for the full year, Citi pulled in a staggering $85.2 billion. That's the top line figure, right? The total cash generated before you even think about expenses. Now, that 85 billion is a solid 6% jump from the year before. And hey, growth is always good to see. But the real question is, what did that actually mean for the bottom line? It meant this: a net income of $14.3 billion. And look, that's not just a big number on its own. It's a 13% jump from the year before. Think about that for a second. Their profits are actually growing way faster than their revenue. That's a really strong sign.
Okay, but here's where it gets really interesting, and you kind of have to read between the lines of these reports. They talk about notable items, one-off things that aren't part of the day-to-day business, like the costs of shutting down operations in Russia. If you strip those out, well, just look at the column on the right. The core underlying performance was even stronger. We're talking a net income of $16.1 billion. Wow.
So how did they pull all this off? Well, we're going to walk through it. First, we'll look at Citi's 2025 report card. Then we'll break down their strategy of simplify and focus. After that, we'll dive into their growth engines. And finally, we'll see what they're looking ahead to for 2026. All right, let's kick things off with their strategy: simplify and focus. This is really about understanding the why behind all those numbers we just saw. And really, this quote says it all. This is the heart of their entire strategy. They're not trying to be everything to everyone anymore. Nope. They want to be the preeminent partner for big institutions doing business across borders, a global leader in wealth, and the go-to personal bank right here in the US. That's it. Laser focus. So, how do you make a big vision like that a reality? Well, here's the game plan. They're doubling down on their 5 core interconnected businesses. They're making things simpler by getting out of 14 international consumer markets. And behind the scenes, they are just relentlessly working on cleaning up their operations and building a winning culture. It's all about execution. Okay, so now we get to the fun part: inside the growth engines. Let's take a look at those 5 core businesses and see how this whole strategy is actually playing out. This is where the story really comes to life in the numbers. First up, we've got the services division. Now, you can think of this as the essential plumbing of global finance, right? It's the stuff that handles huge cash management and trade solutions for big corporations. And you can see right here just steady, powerful growth. Revenue climbed over $21 billion. But here is the real kicker. They didn't just ride a rising tide, they actively went out and took a bigger piece of the pie, gaining almost a full percentage point of market share in a single year. That is a huge win in such a competitive space. It shows their strategy is working. All right, next up, their markets division. This is basically their trading arm. And yeah, another powerful growth engine here, with revenues climbing up to a cool $22 billion. So what was behind that? Well, for one, they locked down the number 2 spot in fixed income trading globally. And get this, their prime balances, that's basically lending to hedge funds, went through the roof, up more than 50% year over year. Just incredible. Whoa. Okay, now look at this jump. We're talking about the banking division, the M&A folks, the deal makers. They saw a massive 32% surge in revenue. Just wow, that's up to $8.2 billion. And this right here, this just perfectly shows their growing influence in the market. They increased their wallet share. What does that mean? It means their clients are choosing to do more business with them, giving them a bigger slice of their total investment banking fees. Basically, they're becoming the go-to bank for some of the biggest players out there. All right, let's shift gears to their wealth management business. Remember, this is a huge part of their new strategy. And just like the others, it posted really healthy growth, with revenues climbing up toward $9 billion. And the driver behind that growth is pretty clear. They attracted almost $44 billion in net new investment assets from their clients. That's not just money moving around, that's new money coming in the door. It's a huge vote of confidence. And finally, we have their U.S. personal banking arm. This is the stuff you and I see every day: the credit cards, the local bank branches. It's actually their biggest division by revenue.
and it grew to a solid $21 billion.
And talk about momentum. They brought in 13 million new customer accounts this year. That is just an incredible number. And it's so important because that's the fuel for future growth, right? For both their credit card and banking businesses. So that gives you a pretty clear picture of a strong 2025. But the market always wants to know what's next. So let's talk about what they're looking ahead to for 2026.
Okay, the one big number they want everyone to focus on is this: 10 to 11%. That's their target for what's called return on tangible common equity, or ROTCE, if you want to sound fancy. All that really means is for every dollar of capital they have, how much profit are they making? It's a super important metric for banks, and believe me, investors are watching it like a hawk.
And they've laid out a pretty clear roadmap to get there. It's all about continuing to grow revenue faster than expenses, squeezing out more interest income, running a tighter ship to improve efficiency, and just being smarter about how they use their capital. It's a really disciplined plan to hit what is, frankly, a pretty ambitious target.
Which, of course, brings us to the big final question. They've simplified the strategy, right? The core businesses have some serious momentum. The targets are out there for everyone to see. So can Citi actually hit these ambitious goals in the year ahead?